Level 1. The Analyst. You're 23 years old. You just graduated from Harvard. Economics degree, 3.9 GPA. You got hired, Bridgewater Associates. Starting salary $150,000, plus bonus. You're one of 50 new analysts. You beat out 10,000 applicants. You're elite. You're brilliant. You're about to learn you know nothing. Your job is research. You analyze companies, read financial statements, build models, 100-hour weeks. You arrive at 6 a.m. You leave at midnight. Sometimes you sleep at the office. Your desk has a couch. That's intentional. Your boss expects you to use it. You're building a financial model for a pharmaceutical company, projecting revenue 5 years out. Every assumption must be justified, every number sourced. Your managing director reviews your work, finds 47 errors, calls you incompetent, in front of the team. Welcome to hedge funds. You're learning the game isn't about being smart. Everyone here is smart. It's about being right. And more importantly, being right when others are wrong. That's where the money is. Consensus is worthless. If everyone thinks a stock will rise, it's already priced in. You need to see what others don't. Find the edge, the information asymmetry, the market inefficiency. That's your job. Find it or get fired. 60.
Level 2. The Associate. You survived. 2 years as an analyst. You got promoted. You're an associate now. Your salary jumps to $200,000. Your bonus last year was $100,000. You're 25 years old making $300,000. Your friends from college are making $60,000. You feel like a god, but you're still at the bottom. You're managing the analysts now, teaching them what you learned, how to build models, how to find inefficiencies, how to think like the market is wrong. You're also starting to trade, small positions, $5 million here, $10 million there. Your fund manages $50 billion. Your trades are rounding errors, but they're yours. Your first trade is shorting a retail company. You think their debt is unsustainable. The stock is at $40. You short 100,000 shares. The stock drops to $25. You made the fund $1.5 million. Your bonus reflects it, another $200,000. You're addicted now, not to money, to being right, to seeing what others don't, to winning.
Level 3. The Portfolio Manager. You're 30. You've been promoted again. Portfolio Manager. You control $500 million. You make the big decisions now. Buy, sell, long, short. Your salary is $300,000. Your bonus was $2 million last year. You're making more money than you ever imagined. But you're also under pressure, immense pressure. Your performance is measured daily. If you underperform the market, you're worthless. If you lose money, you're fired. Every decision is public. Every trade is scrutinized. You're managing 10 positions. Your biggest bet is against Tesla. You think it's overvalued, trading at $300 per share. You short $50 million worth. That's 166,000 shares. The stock rises to 400. You're down $16 million. Your boss calls you in, asks if you want to close the position, cut losses. You double down, short another $50 million. The stock hits 500. You're down $66 million now. Your career is on the line. Then Elon tweets something stupid. SEC investigates. Stock crashes to 250. You cover your short. You made the fund $40 million. Your bonus is $4 million. You were one tweet away from being fired. That's the game. High risk, high reward. High stress, high casualties.
Level 4. The Macro Strategist. You're 38. You've moved beyond individual stocks. You trade countries now, currencies, bonds, commodities, everything. You're a macro trader. You read central bank reports, economic data, political developments. You're predicting how entire economies will move. You're making bets worth hundreds of millions. Your current thesis? The European Central Bank will raise interest rates faster than expected. This will strengthen the euro, weaken European stocks. You're long the euro, short European equities. $300 million position. The ECB raises rates. Your thesis is correct. You make the fund $80 million.
Your bonus is $8 million. You're 38 years old making $8 million a year. You drive a Porsche 911 Turbo, you have a penthouse in Manhattan, a beach house in the Hamptons, a ski chalet in Aspen. You're living the dream. But you're also paranoid. Every trade could be the one that ends you. Every position could blow up. You've seen it happen. Brilliant traders destroyed by one bad bet. You check your positions at 3 a.m. You wake up in cold sweats. The money doesn't bring peace. It brings anxiety.
Level 5. The Fund Manager. You're 45. You don't work for a hedge fund anymore. You are the hedge fund. You started your own fund 5 years ago. You raised $2 billion from investors, pension funds, endowments, billionaires. They gave you their money because you have a track record. 20% annual returns for 15 years. You charge 2 and 20. That's 2% management fee on assets, 20% performance fee on profits. Your fund makes $400 million this year. You keep $80 million in performance fees, plus $40 million in management fees. That's $120 million, your personal take, for 1 year. You employ 50 people, analysts, traders, risk managers, compliance officers. You're running a business, but you're also still trading, making the big calls. Your current bet? A global recession is coming. You're shorting the market. $500 million in put options on the S&P 500. If the market crashes, you make billions. If it rallies, you lose everything. Your investors trust you, but trust is fragile. One bad year, and they pull their money. Hedge fund investors are disloyal, performance-driven, ruthless. You're only as good as your last quarter.
Level 6, the activist investor. You're 50. You've evolved again. You're not just betting on companies anymore. You're changing them. You're an activist. You buy large stakes in underperforming companies. Then you force changes. Fire the CEO, restructure, sell assets, cut costs, whatever increases shareholder value. You just bought 8% of a pharmaceutical company. Market cap, $20 billion. Your stake, $1.6 billion. You think management is incompetent. The stock trades at 50. You think it should be 100. You write a public letter. Demand the CEO resign. Demand the board be replaced. Demand the company split into two. The media covers it. CNBC, Bloomberg, Wall Street Journal. You're a celebrity now, an activist investor, a corporate raider. The company fights back, calls you a vulture, says you're destroying jobs, hurting patients. You don't care. Your job is returns, not charity. The proxy battle lasts 6 months. You win. The CEO is fired. New management takes over. They implement your plan. The stock rises to 90. You sell. You made $640 million. Your funds cut $128 million in performance fees. You personally make $80 million on this one deal. But you've also made enemies. CEOs hate you. Labor unions protest outside your office. Politicians condemn you. You're the face of everything wrong with capitalism. You tell yourself you're creating value, improving efficiency, serving shareholders. But late at night, you wonder, are you building anything or just extracting?
Level 7. The Billionaire. You're 60. Your fund has grown to $40 billion. You've been doing this for 35 years. You've made $8 billion personally. You're on the Forbes list, top 100 richest people in America. You have everything money can buy. Houses on 3 continents, a private jet, a yacht, art collection worth $200 million. You donate to charities, $50 million last year. You have a foundation. It sounds generous. It's also a tax strategy. Your effective tax rate is 15%, lower than your secretary, because your income is capital gains, not salary. The system is designed for people like you. You didn't create it, but you benefit from it enormously. You're friends with senators, governors, former presidents. You host fundraisers. You donate to campaigns, both parties. You're buying access, influence, protection. When the SEC investigates insider trading in your industry, you don't get touched. When Congress discusses raising capital gains taxes, your lobbyists kill the bill. You're above the system now, not subject to it. You've reached the level where rules don't apply. Money buys immunity. You're part of the 0.01%, the ones who actually run things. Elections are theater. The real power is in boardrooms, in private jets, in conversations you have that the public never sees. You shape policy, influence markets, control outcomes, and nobody can stop you because you have something more powerful than votes. You have capital.